Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Happy TGIF, everybody. Hope you're getting ready for the weekend. Of course, anybody who's crypto related, oh boy. Strap on your safety belts. Here comes the crazy ass weekend, and the crypto market's pointing up. Anyway, we like to start off with you guys specifically. We put together a cute little pre-formatted chart deck here for you. And just quickly sort of walk through what we're seeing in the market, but hopefully get some good usable information out of this. But US dollar index, where we usually like to start things off. Interesting how we dead cat bounced right back up into 38.2s. We have a simple rule. We call this the Ray Burchett level. He was a guy I used to work with years ago for the New York floor. And he always said that you got to let 38.2s resolve themselves before you make any big decisions. So I could very easily see, key highs that we just worked our way against, acting as resistance, trend lines as well, 38.2s, put it all together. Not a big surprise. US dollar's running into a little bit of traffic up top here. As well, too, of course, we had econs that came out today that showed U.S. economy. I think the economy on balance is relatively healthy. It's got a good sort of mix between domestic and international. Of course, we have political situation that's always a fun game. We do have to acknowledge the fact that we're very late in the cycle. There will be a recession, down the road here. Doesn't look like it's today, so that's good. And if I understand correctly, I think we're coming into a massive cycle top here over the next year. So actually, I'm still thinking uppy on stocks and things like January barometers. We'll get to that in a minute. They are suggesting more up, but econs that came out today, if anything, it kind of helps this sort of current market state. Employment numbers, big jobs report came out. Showed a little bit softer numbers, and if anything, that makes the Fed happy. They can go, phew, okay, thank heavens we don't have a runaway jobs market. We have to crank rates higher. Unemployment rate really didn't change, but little internal things like average hourly earnings kind of slowing down a little bit. So as a result, not a big surprise to see U.S. dollar coming off. The impetus for the Fed to actually raise rates in this kind of environment backing away. As well, too, I get the impression that sort of flight to safety, oh my God, the world's coming to an end, nuclear war, World War III, blah, blah, blah. That kind of talk has also abated a little bit. And if anything, calmer heads are prevailing, hopefully. As we go forward, it is interesting to see how this little event in the Middle East has completely distracted the public from what was turning into almost a soap opera event with this impeachment stuff. And now impeachment? What's that? What are you talking about? People have sort of forgotten about it. So I think, if I'm not mistaken, the Democrats have said they're going to send it to the Senate next week. But the problem here now is the public even interested anymore? I don't know. On a tragic note, coming out of that Middle East problem, and this is sort of the world of collateral damage, any Canadians out there, we had quite a few Canadians die in that plane crash. And we're hearing now that that plane crash wasn't unrelated, that it might have been an act of aggression on Iran's part. I call it an accident. I don't know. But the long and short of it is we should all take a moment and just think about all those poor people that passed away needlessly. Anyway, moving on. God bless. Rest in peace over all of you. Moving on, risk off kind of conversation. Stock market's still working higher. Following January barometer reports, the first day of January was Started out, kind of uppy, then soft, then strong into the end. Now, if we look at the entire first week of January, we're getting kind of the same message: uppy start, weak mid, strong end. I'm getting the feeling we're getting a bit of a theme here, and my hunch is that probably this is the uppy what we're seeing right now coming out of the gate here. My hunch is into the end of January barometer, we end up topping out. Then we're going to have to go through probably a couple months, maybe even into the latter part of the winter. This to me looks like an Ides of March FU kind of stock market panic, false move, Japanese fiscal year end, yada, yada, yada kind of thing. That's what I'm thinking this is. Then a base, rally into the spring, somewhat muted summer, bit sideways, and then a surge into the fall and into the U.S. election. And, of course, the big Jupiter-Saturn cross. Oh, my God! Happens only once every 20 years. We ought to pay attention. So, that's kind of the backdrop for risk on, risk off. Risk on, and if the U.S. dollar is topping out, that would also support that. But interesting to see, something that's got my head I'm scratching my head here a little bit right at the moment is not that. We'll get to that later on. The bonds are actually enjoying a nice little uppy here on that weak employment report. So interesting, we got stocks and bonds moving up in unison. Now, interestingly enough, we should actually expect that to happen through the growth cycle to a certain degree. I have been very negative of the bond market of late, but I'm wondering whether maybe I need to temper my bearish enthusiasm. This has been a one-way market for an awfully long time. And I was musing yesterday whether I should hop out of that short. This will be a fun commentary as this thing works higher, and I'm like, well, maybe should I cover my short now? Woulda, coulda, shoulda, whatever. We'll see how that goes. I suppose the bonds themselves are enjoying a kind of thank goodness, with the oil coming down. Because remember, rising oil prices, that's probably one of the biggest worries of the bond market, is the inflation problems with rising energy prices. So a little bit of disconnect with the oil and the stocks right now. Interesting, Bitcoin here, just sort of muddling along, doing its thing. And of course, we'll talk about that in a bit more. I think we did have actually a pretty good Wyckoff check there overnight. So we'll see how things going. But, this is the first time in a long time we actually got W's working on the crazy-ass corn here. So go figure. All right, so risk on, still working. Oil, we kind of talked about, gee whiz, that's awfully one way. And, of course, remember, the commodities trade, years as a commodities broker. Buy your unleaded in the middle of February. Sell at the middle of May. You made money 9 out of the past 10 years. So I'd be looking for some sort of bottom in energy. And, kind of like what we were saying, if anything, the stocks at some point here, they're going to look over at the energy and they're going to go, gee whiz, this thing's coming down. Maybe we shouldn't be as high as we are. And I do like the idea of the stock market getting thumped there in middle of February kind of idea to mark that bottom. Talked about bonds. Gold, man, I've been talking a lot about gold recently. I do like the idea of, wicks and tails like to be eaten, and that's one big honking wick on both the bonds and the gold, and even the yen for that matter. So I do like the idea of a counter-trend rally, and yesterday's baby powder report from Julian sort of pointing out that higher time frames, the gold's still pointing up. It's just maybe things got a little too far too fast. Now, seasonally, this actually is the time of year when we should be expecting some sort of seasonal top here. So I am going to be watching, especially if the stock market falls out of bed there in late January, probably more like mid-February. I am looking for some sort of counter-trend rally on the gold names up into prospective actual short trade locations. So be cognizant of that. The technical damage, outside downside key reversals, double tops, empires, right? The technical damage has been done. Now, if anything, it's beholden on the market to now slowly bottom, paint some sort of W's, that kind of thing. And, for the futures traders, we spent a lot of time in the daily brief just picking apart this chart. I can understand for the lower time frame traders that there were half decent little trades that came in here on this tank. But for the moms and the pops of the world here, be careful, everybody. Gold is in nosebleed territory. Yes, there are traders trades. Newmont rallying back up top, Barrick rallying back up top, the gold stocks rallying back up top, the gold itself, candle body highs as trade location, reload zones, trend lines, top of value. If we get back up into this 1600, especially on Mr. Orange hair, Mr. Orange toupee, beg your pardon. He said something today. Oh boy, the gold market's going crazy, right? That's the Druckenmiller trade. We all have to remember from the last U.S. election that if you get those crazy ass sort of events that are not economically driven, they're just headlines, geopolitical, those are often great trade setups. So, with that said, I can understand the gold bugs are working alongside of the market. I think there's a half decent little trade here. But I actually like the idea of hunting shorts up top here even better. But that's just me. We'll see how this develops. Kind of like what I did on that bond chart. And I sort of painted what I'd really want to see is give me something that looks like that. And then, of course, I'm going to get all excited about a short. So, all right. So, won't talk too much more about gold today. Always in the market looking for W's. Brian. I mean, gee whiz. I love W's. I buy them. I love W's. This one here is come up on our screen repeatedly. And this was a beautiful reload zone right down in here, which I missed. Pissed me off. Anyway, probably best, slower conservative players, just wait for the W to come in. Here comes a big fat W on a move through 304. And Brian's in there on the buy side here at 305. It shouldn't surprise anybody. And, of course, you look at this chart and like, holy crap. Is it worth me taking a risk coming in on the buy side and just risking to a break of these lows? Is there any kind of room for me to make money to the upside? I think you know the answer to that. Interesting side, and I'm going to be talking a lot more about this going forward, so just be forewarned. We had a really big objective heading into the end of 2019 to get our automated screener engine up and running. And super proud of Sjord, just a total boss. Here's one model that I've already actually got up and running and spits out a bunch of results. And got to tell you, some of these trade ideas are looking beautiful. So I wanted to show you one today that I'm in there shopping for. This EXPE basically, hopefully everybody can see. Big rally, potential bull flag, 1 low, 2 lows, 3 lows. What do you think? There's a potential of a bot set up there. These are all those names on this screener list. And actually what's really cool is this one. And what I really like about Sjord's engine is he tracks, and he just started back in December, he tracks even the previous signals. The last one that came in was this lows back on the 12th of December. And, the proof of the pudding's in the eating. You can see there is the 12th of December. That was that signal. And what do you think? Was that a half-decent signal? Not bad. So these are the ones that just fired. There is that Expedia EXPE. And look at this beautiful bot setup. It's just so textbook. You're such a pretty. So guess what Brian's doing in there? Gonna be doing some hunting with the bowl and spoon. And the good part about this is, we're coming into earnings, obviously. But any kind of oomph. What do you think? Has this thing got any kind of room to move up here? What do we say about gaps? Do gaps like to be left open, especially that size? Is it worth me coming in and taking a risk off of the 25 level and risking down to the bottom end of the range with the potential that we might get some sort of crazy ass pop up into here? So let's keep an eye on this one going forward. All right, so there's your daily summary. Oh, actually, we didn't talk about the corn. All of you guys are, wait a minute, the corn, god damn you. All right, so good old corn. What's great to see here is, and this is what I spent a lot of time in the video today talking with the Daily Brief audience, was I think this was a really, really good example of what we call a Wyckoff check, where the market W's, it breaks out. Of course, the public's all FOMOing up top here. And all the market's done over the past couple of days is just worked its way down and came down and literally kissed that breakout level and then has jackknifed back up. So if you are a bull, that's actually exactly what you want to see. It's interesting how this little trade, just buying the W, is still just working away, doing its thing. There's not really a hell of a lot for higher time frame players to be doing right now. Lower time frame, which I don't really like talking to you guys too much about on these free videos, because it's just too hard to follow this day by day, in and out, zipping in and out, and only like a 20-minute video here, 10-minute video here for you. But I do think that we had a pretty well-defined sort of day trader setup come in yesterday. The question ultimately was, you had your move stop to scratch level hit. You can see the beautiful, absolutely textbook Wyckoff check of the original breakout level. The dead cat bounce reaction off of that, and you can see on that event, all of a sudden the buyers started buying, because I think that's what they were waiting for. And then we had momentum breakouts, Willie nice and stupidly oversold, W's coming in, and you could have taken a long trade heading back up, and we sort of talked about that. But the general message that I'm sort of conveying to people, and which is the chart I want to show you, I think generally speaking for the public, we're in sort of this, and I still like this thinking. Double bottoms, boom, breakout. Don't chase. If anything, what you have to do now is you have to let the market consolidate a little bit. And kind of like what I showed you with that EXPE, right? What I want to see for ultimately me to set up a sexy trade is I want to see 3 higher lows to work with, nice triangles, and then breakouts following that consolidation. So to a certain degree, that's kind of what I'm thinking here now. Ideally, you have your double bottom trade. If you're in off the double bottom, awesome, way to go. You've got this setup working, kick ass. Now the lower time frame players, now they can start coming in and hunting for like bullish continuation patterns to trade lower time frames. That's basically what I'm thinking is happening in crypto right now. I will say that, there are other ideas that we actually did pull the trigger on. I didn't buy this because I don't really like the risk reward, but there are some trades. I picked up some calls on Ethereum, and I think this was a pretty darn good example of a Wyckoff check. I mean, you don't know what's going to happen here. I don't know, but really the question ultimately is it worth us, identifying these W's, which identify risk windows, and is it worth our while coming in and buying them? And I'd say 60-70% of the time, especially if the 50% rule is a gazillion miles away, it's actually worth our while to take that trade. Sort of finish off today, and keep in mind that's just saying this almost the same thing I said yesterday. But, there are other names. ZRX, people were posting this in the lounge, and this is what I love about TRI, right? We have this community, and we're just constantly posting ideas, and they're coming from 50 different directions, and, you're constantly the chatter, okay, where's the W's? Where's the W's? That kind of talk. I really like the look of this ZRX, same sort of idea, nice sideways consolidation, lows held. I really like this ZRX because it's also got these bottoms from back in the fall also working. So, like I said, and again, I really think it's a good idea to look at your idea versus USD. But, normal seasonalities, you can see February, that kind of idea. Where are the W's translates into the seasonal rallies into the spring. Well, I don't see any reason why that can't happen again here. So it's just yet another example of W's coming in on the crypto space. And I think this is a opportunity is now here kind of environment. Call me crazy, but it is just what it is. All right, why don't we leave it at that, guys? So get ready, hunt those setups. I think they're coming in here. Whether it be the stock market, whether it be crypto, whether it be crypto stocks. I think this is a really interesting window that we're in. So get ready to have some fun here into the spring. And I suppose just it's just an example of TRI. Here's somebody here just a little while ago posting, "Hello, nice big fat winner here." It looks like, wow, way to go, Joshua. So I mean, hopefully everybody looks at this. Oh, yeah, well, I can see the W. I guess it makes sense why this happened. And we're just doing this all day long. It's just what we do. So have yourselves a great afternoon, evening, weekend. Keep in mind, oh, boy, school's coming up starting next week. So everybody get all your ducks lined up. Get all your tools in place. You new level oneers, get ready to have your brain fried. And, of course, let's all learn, and become better traders through the process. All right, guys, have yourselves a great day. All the best, and bye for now.